İstanbul Finans Zirvesi'nde programımıza Ortadoğu ve Kuzey Afrika Bölgesel Ekonomik Görünüm başlığıyla devam edeceğiz. Bölgesel Ekonomik Görünüm konulu Ortadoğu ve Kuzey Afrika panelimizin moderatörlüğünü Bloomberg ET Ekonomi Grubu Başkanı Sayın Özlem Dalga yürütecek. Konukları ise Amerika, Ortadoğu, Afrika ve Amerika Hazine Departmanı Müsteşar Yardımcısı Sayın Baukol, Lübnan Odea Bank, Banka Audi Grup CFO'su Naim Hakim ve Odea Bank Ekonomik Araştırmalar ve Stratejiden Sorumlu Genel Müdür Yardımcısı Sayın Serkan Özcan olacak. Buyurunuz lütfen.
Şu anda açık. Yandığı zaman. Ne zaman açılır?
Tamam, başlatayım mı saçımı? Tamam. Merhaba, iyi akşamlar herkese. Yorucu bir gün oldu galiba. Gidenler üzülecek ama onu söyleyebilirim. Çünkü en güzel session'ı en sona saklamış zirve yönetimi. Bizimkisi MENA session'ı. Burada tabii panelistler hepsi İngilizce konuşuyor. O yüzden let me switch to English. Welcome to the MENA session, everyone. This is the most interesting session as it's the last one, but not the least one. So the big story today, as you all know, will Fed start to taper or not? And we will talk about the effects of the MENA region. And actually, there are two risks in the region. One is first is the possible military effect in Syria, and how will Fed tapering affect the economies in the region? Those are the questions to be addressed, I think. Let me introduce my panelists. Andy here is the Deputy Secretary for U.S. Treasury. So to my left is Naim. He's the CFO of Odea Bank, and Serkan Özcan is the head of strategy and research at Odea Bank. So let me address you all. Which one is a bigger risk for the countries in the region? Andy, the floor is yours.
Thank you. Thank you. It's a pleasure to be here, and always nice to come to Istanbul. Pleasure also to meet my fellow panelists. We at Treasury don't unfortunately comment on what the Fed might be up to, but let me comment broadly on the situation of the global economy and the impact on the region. Clearly, over the last few years, since the global crisis started in 2008, 2009, the situation has been quite dramatic and quite difficult for a number of countries, my own included. The U.S. economy has rebounded over the last 2 or 3 years with, I would say, moderate growth, but still not as much growth as we would like. And Europe, of course, is also just starting to come out of their recession last year and starting to grow finally this year, but also not as much as we would like, and not enough to support the global economy. Those factors, of course, have had a big impact on the region already. The policies of the advanced countries, as coordinated through the G20 over the last 5 years or so, has provided really some unprecedented support to the global economy. That support will begin to normalize soon as the economies get back to their potentials, and that will obviously have an impact on emerging markets and the region here. Now, the good news is, these policies are shifting back to a more normal pattern due to stronger growth in the United States and the beginnings of growth in Europe. And those factors themselves will provide significant support to the global economy, and not only to the countries involved, but to this region and to emerging markets more broadly. Now, turning to the second part of your question, Syria obviously is a significant issue for the region and significant for the global community in a number of ways. On the economic side, Syria is already having a significant impact through a number of channels. Obviously, the refugees are having a large impact on Jordan, on Lebanon, even on Turkey. Trade patterns in the region have been disrupted, particularly for Lebanon. And then the global political uncertainty has helped elevate oil prices for the last year or two, and that also has provided a headwind to advanced countries and to other oil importers in the region, including Turkey. So the regional economy is already feeling the impacts of the Syria crisis. I won't speculate on what might happen going forward in Syria, but just to say that already the economic impact has been significant. The global community has tried to mobilize some support, mainly through UN agencies, to help some of the countries in the region deal with that. And the U.S. has been a major contributor to that, and I'm sure will continue to be so. Thank you.
Thank you. Mr. Hakim, which one do you think is a bigger risk for the region, the Syria issue or Fed tapering?
Well, if the question is a possible attack on Syria and all that, for me it's definitely the war thing that will have a big effect on the region. In my opinion, a war can start in one place, but nobody can see where it will expand to. And when it's war, I think all fundamentals or financial theories or whatever do not apply anymore. So that's why I think any big clash or war in this region would have tremendous and big damage on the region and big effect on the MENA part of the world.
And Mr. Özcan, what's your take on the question?
When you take, of course, the both risks, which will be bigger, I think both will be bigger. But as Naim said, I totally agree with him that we don't know how it's going to extend going forward. But let me tell a little bit about how Fed tapering actually could affect the region. Since we have someone from Treasury who cannot speak about the Fed policy, we can do it for you. Actually, the region is all about emerging markets and emerging market economies, with some of them having huge current account balances. But we should differentiate Turkey with other regional countries in terms of how the tapering or overall global liquidity will affect the economy. When I take, for example, the example of Turkey, what we know that as long as we don't finance our huge current account deficit or saving deficit actually with a very low cost, then it's a huge problem for us. As we have seen recently, Turkish lira depreciated around 20-25%, up to 25%. Now it's around 15 or 12% year to date when you check it year to date. but the effect on the region is totally different. What I will say, how global liquidity is affecting the oil prices is much more important for most of the MENA countries as compared to how the overall liquidity will affect them. As long as we all believe that, I mean, most of the people in the banking and financial industry believe that the overall global liquidity is the reason for high oil prices for the last 2, 3, maybe 4 years. We are now seeing that with some sort of tightening buys, with some hawkish buys, there is a downward pressure on the prices of oil, and that could affect the fiscal balance in the region. So I will definitely, my answer to the question is yes, definitely the attack on Syria will be a bigger problem, but we should not undermine or underrate the overall effect of the Fed tapering on oil prices and the regional economies.
Okay, you know, as Deputy Prime Minister Babacan said today at the summit, the world will find a new balance one way, sooner or later. How will this new balance affect the countries in the region? Which one is the most vulnerable? You know the region really well, so let's start with you.
You know, the new balance is in some ways, as I mentioned, a positive balance based on stronger growth in the advanced economies. It will have implications for the region in a number of ways. Certainly, the countries that I think are facing their own political challenges are having the most difficulties economically. So the so-called Arab Spring countries are facing, a period of low growth, low employment generation, a lot of domestic unrest as a result of that. I don't know that the normalization of global economic conditions are going to have a significant impact on that, but certainly in terms of countries that are facing the most difficulties, I would point to those. I think the international community has tried to come in and help some of these countries that are going through these political transitions in a variety of ways, providing finance, providing some technical assistance, trying to encourage private sector investment. But these transitions are lasting longer and being a bit more volatile than people had anticipated, I think, 2 years ago. So that issue is still out there and still needs a lot of attention from the international community.
Thank you, Mr. Baukol. So what do you think about the question? I mean, which countries are more at risk in the new balance as liquidity starts to draw back?
It's normal to say that the countries with bigger current account deficits with needs for financing are the ones that have the bigger risk. But in the longer term, and given this new balance, whether it's it's a political one or economical one, or I don't know which new balance will be set in this region. But if you want to think a little bit further and a little bit, if we hope that this tension will settle down and think about future sustainable growth in the region, then we can think about how, the interaction between Turkey and MENA region and the immediate neighbors of Turkey can help to promote more growth and more, let's say, cross-border transaction, which would help this region to go further in the growth. So that's why, if you like, afterwards we can talk about a little bit how these interactions can be enhanced and reinforce the growth. But till this new balance clarifies and we know exactly on which level we're saying, whether it's political or it's economical, then it's hard to say exactly what will happen.
Okay, Mr. Özcan, which countries are at risk in the region as we're looking for a new balance with when the Fed starts to taper.
Actually, depending on how you define the region, if you include Turkey, and if we are talking about the overall global liquidity, I think Turkey is number one in terms of getting all the beneficials in the last, let's say, 5 years from the overall huge global liquidity. So our definition of MENA region is if it's plus Turkey, Turkey is the most vulnerable one. I mean, it's very clear. But let me tell a little bit about what I said for your previous question. I think we have the same clue here. For me, instead of current account balance, most important thing is for the region is the fiscal balance. And they are very much dependent on the level of pricing in the oil markets. So we have two things going on. First, from supply side, we have this shale gas revolution and the boom. So which is, for example, I read today from international media that if the shale boom is going to affect Saudi Arabia's presence or the strength in the region as the number one supplier. And on the other hand, we have this liquidity issue which has some sort of effect, although Fed Chairman Bernanke denies it. He said, we don't think that global liquidity is too much important factor for determining the oil prices. That I don't agree with all due respect. I think liquidity is also going to have some sort of effect. So for the Middle East and North Africa, I remember a work from IMF, right? They were making this break-even prices, oil prices, and Iran, Bahrain, I think Yemen, they were the countries mainly which are going to be affected by the low oil prices. So if that continue like that, if we'll see from the liquidity side, okay, less liquidity, less prices for the oil, so it's less revenue for the countries, then it's going to affect that way. But on the other hand, we also don't forget that the U.S. new revolution of shale gas is another factor which is going to affect the region by oil prices.
Okay, thank you. Mr. Baukol, what do you have to add on this issue? I mean, there's the economic potential of the MENA region, but then we have risks to the region. How are the economic and financial interactions, which are the key ones in the MENA region economies?
I think the other speakers have identified some of them. The oil prices being a key factor, obviously, for the region, for the exporters as well as the importers. Mm-hmm. The exporters have, had a nice windfall the last few years. Some of those countries have taken advantage to invest more in their domestic economies to try to diversify their economies away from oil and gas, expand education opportunities and other things to become less dependent on oil and energy products, but it's a long-term process that is far from complete. So some of those countries are still quite vulnerable and still highly dependent on oil, particularly Libya. On the other hand, the oil importers have been dealing with significant price increases in the last few years, very high prices. That's had an impact on Turkey in the current account. It's had an impact on other countries in the region that have high domestic subsidies on fuel prices, such as Egypt and Yemen. And that has had a major impact on their fiscal balances and their external balances. Some of these countries on the oil importing side need to take additional steps to deal with the impact of those high prices, particularly on subsidies, which amount to, in some places, 6, 7, 8% of GDP. Mm-hmm. There's a lot of opportunity to spend those funds more wisely and build up social safety nets and other parts of their economy, and which would help reduce their vulnerabilities and increase their productivity.
Well, I think we looked enough at the risks now in the region. I mean, let's talk a bit about the potential of the region, how the MENA countries are integrated, what's their potential to be achieved. Who would like to start? You?
If you like, I can start, but I will focus mostly on the interaction between Turkey and the MENA region, and more specifically its immediate neighbors, where there's a lot of untapped potential still yet. If we look at the numbers for the past 10 years, we see that the trade turnover between Turkey and the MENA region has gone up from approximately $6 billion to $47 billion over the last 10 years, which is a very significant improvement. But if we compare that to the total turnover of both geographical spaces, it's about 2.5% of their total turnover, standing at $2.5 trillion. So there's a lot of room to improve there, and which will benefit both regions. And even if we look at the closer countries to Turkey, like Lebanon, Syria, Jordan, and Iraq. And let's, for the time being, hope that the tension will settle down and things will go back to normal pace and people will look forward. So there also there's a lot of potential in terms of improving the flows between these spaces, geographical spaces, in terms of also trade, imports and export. The share of the imports of these countries from, or the Turkish good in imports from these countries, only 13%. There's quasi very small percentages from Turkish imports from these countries. So any additional increase in the trade turnover between those economical spaces would have tremendous effect on both sides. Of course, also if we look at the flow of people, the human flow, the tourists, we see that Turkey received about like 32 million tourists a year. The other countries receive about 20 million. If we combine that, we're talking about 50 million that can really visit the region together, because it's the proximity. And well, that will also bring new foreign currency for both regions. And if things go well from that side. If you also think about more long-term and more regional cooperation and partnerships, there's a lot of potential and there's a lot of needs from countries just on the borders of Turkey in terms of power plants, electricity generation. There's a huge shortfall in the production of electricity in those countries, whether Turkey is has surplus or aims to become a net energy exporter. So there could be some long-term partnership, and that would help Turkey to invest there or to sell the electricity, and that will alleviate the burden of new investments in those countries, especially after what's happening there now. We can also talk about the water needs, the water infrastructure, and we can also talk about the road building and whatever is needed, and where Turkey can play a big role in terms of helping those countries to reach or to cover their needs, and at the same time it will help those countries focus more on other, or lessen the need to start new investments, since they are benefiting from the economy of scale that has always already been built here in Turkey.
Well, thank you for crunching all those numbers. As you said, there's so much potential, but all of a sudden, due to the last political events, the interest from Middle East to Turkey has decreased. I mean, such as the examples in Dubai and Kuwait, the recent examples in the recent news. I mean, how can Turkey turn things around? How can Turkey promote investment from Middle East to Turkey? Mr. Özcan, do you want to continue on this issue?
Yeah, I mean, if you ask me, it's not only about the Middle East, but I believe we are, for the financial markets at least, we are far from our fundamental numbers, because fundamentally I believe Turkish lira will be appreciating like 4 or 5% more, although we have coming of our highs recently, and the inflation, as per our expectation, is going to be lower than 7%, so interest rate can come down to 7.5%. But it's not coming. It's not coming because the perception about Turkey, Turkish economy, and Turkish politics, unfortunately, has changed not only because of international or geopolitical issues, so-called Syria and the others, but also some local issues too that we have recently witnessed in Turkey started in June. And unfortunately, that's harmed the overall political stability perception of Turkey. And I believe that's why I will say we need to change the perception, but not only for Middle East, North Africa, but also for Europe and West, let me put it that way. And actually, when it comes to potential, Özlem, we have already discovered the potential, and we are now just making most of our, as per year-on-year growth, we are exporting more to the Middle East and North Africa, that's for sure. But one should take into consideration that although we have seen some sort of trading boom between MENA and Turkey, we have not seen the same thing in terms of capital flows. When you take the example of share of the MENA region countries in the Turkish capital flows, it is around 9%, the share of overall MENA region. You might say it's not a bad number. Yes, it is. It's not a bad number. Actually, it's a good number. But unfortunately, 7 points out of this 9 is coming from Turkish offshore banks in Bahrain. So that is telling me the story. If you are growing in the trading side with a boom, but you don't experience the same thing in the capital flows, you could still say that there is an upside potential for Turkey and the region in terms of financial flows. Actually, Odea Bank, Bank Audius Group's investment in Turkey is a kind of representation of this deficiency between these two regions.
Well, the question is, how can Turkey tap that potential?
It was not so existent. This is what I'm trying to say. We had no financial relations with MENA region. Mm-hmm. It was very small. So, I mean, whatever you want to do 5 months ago, I mean, what I'm trying to say, the perception has not changed. Or even it changed, we had the effect from West, not from the East, because it was not existent. Mm-hmm. This is what I'm trying to say. For the perception, I think the only way is the summit like this. We should understand, we should explain people that we are still on track from political side, from financial side, from monetary side, and we should lobby for that. We should explain people that Turkey is on track, and the motto is stability.
I think Mr. Hakim has good numbers on that. In the past 10 years, we started from nothing, and we've come to
like 47 billion in trade. Now, of course, I think, as Serkan said, the people from the Middle East want to come and invest in Turkey, and it's just recently that Turkey has opened up to them. And as he said, Bank Audi coming here and investment, and Odea Bank is the first, or is a representation of that. But to come back to the question of the political side is for the politicians. So if the politicians are not playing right, it will affect the financials, the investments, and all the relationship between these two regions. But I think coming from that part of the world, there's the appetite to come and invest, I think, is there. But when there's tension, of course, that appetite will be less. So the stability, the overall stability, the confidence in the relationship and between the two regions is very important. And of course, the stability in Turkey itself is very important.
Mr. Baukol, you know the region really well. We've talked about political tensions that decrease investment appetite. What do you have to say on that and, you know, the recent political problems in the region, their effect on investment appetite?
Yeah, clearly, particularly for the countries of the so-called Arab Spring, Egypt, Tunisia, Jordan, their ability to attract private investment and private capital flows has been significantly impacted by their ongoing political challenges. And that, you know, that looks likely to continue for some time. I think we from the U.S. Treasury, as a policy matter, are working with a number of countries to try to help support these economies. In the meantime, through one vehicle is the so-called Deauville Partnership, which was created by the G8 in France 2 years ago, which includes the G8 countries, the key Gulf countries, Turkey, and a bunch of the international financial institutions. And this mechanism has worked to try to provide official financing to these countries. It's worked to try to provide technical assistance. It's worked to try to encourage private investment. And I think there's still much more that is being done under this partnership. Just a couple of examples. The EBRD, the European Bank for Reconstruction and Development, which of course expanded to Turkey just 5 years ago very successfully. And Turkey hosted their annual meeting here earlier this year. The EBRD is now expanding to the countries that border the Mediterranean, including Egypt and Jordan and Morocco and Tunisia, with the goal of trying to provide new financing as well as technical assistance to facilitate private investment in these countries. So that's just one example of what the international community is trying to do to address some of these countries that are still facing significant political challenges, to try to help those political transitions move more smoothly.
You know the transition countries really well. I mean, we were speaking about Turkey being and setting an example for the Arab Spring countries. What do you have to say on that? I mean, as we search for the new balance.
Yeah, I think Turkey's experience over the last 10, 15 years has quite a bit to offer the other countries in the region that are going through these political transitions. You know, Turkey had a very difficult time 12, 15 years ago, had some serious financing issues, had banking sector issues, worked in partnership with the IMF to help address those, and implemented over a number of years a very credible yet difficult package of reforms, particularly in the banking sector, but covering a wide variety of other issues as well, fiscal and subsidies, etc. And that experience, I think, can play dividends for countries such as Tunisia, which has issues with its banking sector and dealing with non-performing loans, with Egypt in terms of dealing with subsidy issues and the building of a social safety net. So there's a wide variety of experiences that Turkey has been sharing through this Deauville partnership process, and we certainly welcome more and more of that.
Thank you. Well, Turkey's role in the region, what do you have to add on that? I mean, as Turkey turns more to North Africa because of lately what happened with the Middle Eastern countries, what do you have to say on that, Hakim Bey?
Well, there's historic ties between Turkey and the region, between Turkey and the Arab countries. And the potential of mutual cooperation and mutual growth is there. Putting political things apart, I think there's a lot to do from both geographical regions. We have to, Turkey has to open up more to this region and to maybe explain more about its willingness to go there or to accept investments or to more interactions with this region. And of course, the experience and the past 10 years that Turkey went through, where the growth that happens here and all that can be a good example for those regions. So it's just about more communication, more open up, and more, frank transaction between those regions can help a lot.
How can we increase these transactions? I mean, we mentioned the opportunities pretty much, but let's go a bit deeper to the issue. For instance, where should Turkish exporters go? Where's the potential as they search for alternative markets?
Yes, of course. They are starting to, go to that part of the region, the MENA region, the immediate neighbors of countries, and the share of export, I think, of Turkey to that region is getting higher recently. So that part would help. Another thing that would help also is to have more financial institutions on both sides, and which would help also to finance all those flows in terms of trade finance, in terms of financing, the touristic activity, and also financial institutions, banks can help into establishing long strategic projects, and help also in building the private-public partnership projects and long-term projects such as electricity, water, and road infrastructure. So having financial institutions on both sides, understanding both regions and both geographical regions will help a lot to facilitate that interaction.
Well, Odea Bank came to Turkey a year ago almost, I believe. Yeah. You are an investor to Turkey from the region. Yeah. So let me ask you this. Are you happy with the decision? Yeah? Would you come? I mean, a year later, what would you say on the issue?
Well, it has been a wonderful experience, and now Odea Bank came to Turkey with this idea in mind to bridge the financial relationship between the two regions. But we also are a Turkish bank for Turkey, for Turks, so we're operating also in Turkey. So, and thank God we have till now a very successful start, and better than expectations. So I think the experience for their bank should also be an example for other banks willing to come to Turkey, hopefully, and hopefully they'll have the same growth and success we're having, and hopefully that will continue.
Okay, which sectors have potential? I mean, financial institutions do make it easier, as you said. I mean, talking about potentials, maybe, any sectors you would like to add, draw attention to our audience's attention, maybe?
As I said, the contractors, the contracting sector, there's a lot of things to build in the other part. So this is an opportunity for Turkish investors or Turkish contractors to go and help build the roads, build, eventually the water dams, the plants, etc. So there's a lot of also potential for the contracting side, also for helping those countries into implementing their strategy of expansion and growth also.
Mr. Özcan, what would you like to add? Is Turkish businessmen doing enough to tap that potential?
Yeah, I mean, as much as they can.
Given the circumstances.
This is what I was trying to say. Actually, when you look at the ability and the capability of the Turkish businessmen and MENA regions, business people, it was a success. We have seen that now the share of MENA region in our export is higher than EU. It was not only about our flexibility, but also our long-term cultural proximity with the region. But the problem is the financial sides are far to each other. And just give you an example how different we are in terms of financial sector. Now we have in Turkey, very recently, we have our loan to deposits breaching the 100%. So we have more loans than our deposits on our balance sheets. It's a totally different story in the MENA region. For example, in Lebanese banking sector, what was the number? Around 60% loan to deposits, 30%, 33%. So, well, what you can see is a result of overall economic structure. We have a problem of saving deficit, and they have a problem of saving surplus. So, as long as you create necessary, sound, healthy financial interaction between these two regions, the potential is definitely higher. So the answer to your question is, right now they can't tap because of the limitations. But I believe, as Naim Bey said, it is very important to have a successful story here with Odea Bank, because if it goes that way, I will definitely believe and hope that there will be a lot of financial institutions from here to region and from region to Turkey will be willing to invest cross-border to increase these relations, financial relations, and that is the only way for us to go from here with a potential, with an upside, which I'm talking about exponential growth.
Well, all the financial institutions look for what Mr. Bernanke will do, how U.S. economy will do. Mr. Baukol, the floor is yours. How is the U.S. economy doing? I mean, 5 years since the crisis began, is worst over? I mean, are things doing good enough in the U.S. economy?
I think things have improved significantly, and we, thanks to some very aggressive policies back in 2008 and 2009, helped avoid what could have been an even more serious depression. And growth has picked up and has been fairly steady the last 2 or 3 years, but it's still relatively low. So most people are talking about growth rates of maybe 2.5% to 3% over the next rest of this year and into next year. And that is not enough to create the jobs that we need to create back home. So we are still very focused on growth and on providing jobs. And the president has outlined a number of ideas and working with Congress to try to get those implemented, while also dealing with our budget situation, which has been quite challenging over the last couple years. So things have gotten better, but we still have work to do, and we continue to work on it. I think the communique coming out of the G20 summit just recently highlighted that not only in the United States, but also globally, the focus remains on growth and job creation, and in our view, that's entirely appropriate.
Well, is 7.3% unemployment enough, and the growth now that's been achieved, is it enough?
No, definitely we're not satisfied with that. Unemployment has come down to 7.3%, but we would like it to come down even farther, and of course we want to create more jobs so that the labor force grows as well. So the one number can't tell the whole story, and certainly the 7.3%, while improved from a year ago, we're not satisfied that that's a good number by any stretch of the imagination.
We are still dealing with the crises. That's one fact. And what does this mean for the MENA countries? What do you say?
Well, certainly the MENA countries, as hopefully the U.S. economy continues to pick up over the next year, hopefully as European economies begin to pick up and Europe continues to take the important steps that they need to take to make that happen, that will provide significant support to the MENA region, but also emerging markets throughout the world. Other parts of the world also have their parts to play. Japan is undertaking a number of steps to try to spur growth. Other countries in Asia. I think we've learned over the last 5 years, we're all in this together. I think the G20 construct has proven to be a helpful way to help countries understand the global impacts of all that we do, but there's still a lot of work to do.
Well, is there anything you would like to add on the global economy, how the global economy has affected the MENA region countries?
Actually, for the global economy, yes, I totally agree with Andy Baukol that the strength is there. I mean, but relatively speaking, because world contracted, grew less than 1% annually for a very long time. So now seeing 2.5%, 3% is something marvelous. But it just doesn't mean that we are going to see a huge change in understanding, let's say traditional understanding of recovery. So I still suspect that we are in the very early phase of this recovery, and we might already have affected, deteriorated to what's happening in the U.S. with this tapering talk. And I believe interest rates come down structurally. It's not a temporary phenomenon. And the world will continue with high liquidity, low rates for a very long time. So, as we said, for MENA region, since they are the EM countries who are in search of returns, including Turkey, I'm including Turkey to the region too, I believe it is affecting positively with this high liquidity. The return on the EM countries are higher, and people started to go into details in the region. Now Turkey is one of the examples, but Egypt, unfortunately, changed in the last 2-3 months, but Egypt was one of the countries that all the international investors are trying to get all necessary details to invest. I mean, that was the fact like 3 months ago, 4 months ago, whatever. So overall global liquidity is helping EMs. We are in the same universe with other EMs, so it's helping us too. But any tapering talk or any change of a stance from Federal Reserve today that I don't expect at all will affect negatively.
Do you think Fed will start to taper today?
I think they will taper because they said they are going to taper.
Yes.
If they would have chance, yes, they do, but I definitely think that it's not time to start. I don't see the same strength. As I said, it's a relative strength right now. So even this rise in the 10-year treasuries affected the mortgage rates by more than 100 basis points. And today I got the numbers. I was here, so I don't know the details, but building permits and the home sales, they are all below the expectations. I mean, it's very normal that this recovery started with housing, and it can go with housing very easily. So you got to be very careful about tapering or the monetary policy stance. I would prefer not to see any tapering today, but if they make it, they will make it lower than market expects, which will be around $10 billion US. But the rhetoric for forward guidance, I think, will be much more important today. If they convince people that they are not going to raise the interest rates until the end of 2015, as expected, I think it will help. This is what they should do. This is just my personal view.
If the amount is below $10 billion, what does this mean for the financial markets and the MENA region countries' financing?
Okay, I mean, we all know that. I mean, as I said, we all took advantage of high liquidity, low reserve money rates. We will be more than happy to continue to use these cheap cost of funds. Anything below 10 billion, I would say will get a very positive response from EM countries. And I believe some market participants in the last 2 weeks have played for that. And there are now some people in the EM investor universe who believes that Fed won't be that hawkish as they stated at the end of May.
Maybe the risk appetite today explains that, huh?
Probably, yeah.
Okay. Is there anything you would like to add on the issue? I know you can't talk about it on the monetary policy, but on the implications on the MENA region countries. I mean, the world is flat, as you said.
Yeah, I think I just maybe rephrase something I said earlier, which is, as I think the term you used was the new balance is gotten to in terms of the world economy. If that's built on the back of stronger U.S. growth and stronger European growth, then that will help lift the global economy, and that's really the important bottom line.
Okay, so we have, I think, 5 minutes left, so let's open it up for questions. Do you have any questions? Any questions from the audience on the issue? Murat Bey?
Thank you, Özlem, for such a efficient moderation. And thanks to Andy resisting all the questions, the very sensitive ones. But my question goes to actually Serkan. I think he touched upon a very important topic, which is if you look at MENA for the time being, there is somewhat of a, let's say, commercial integration, at least between Turkey and MENA, and within MENA maybe. So people buy and sell, goods to each other. But if you look at the capital flows, we are basically nowhere. And you are from, both of you represent Oturum, which is a Lebanese bank, and Lebanon is not a resource-rich country. Lebanon
Oturum is owned by a Lebanese bank.
But it is a Lebanese bank, let's say. Okay, it's a Turkish bank owned by Lebanese. Lebanon is not a resource-rich country. It is entrepreneur-rich country, that we know. And it was very interesting that Oturum did not acquire a Turkish bank with the branch network ready, just like everybody else has done. But instead, it has started a brand new system, the whole, network, which is very interesting. Now, what is it that, for example, the Saudi or other GCC capital doesn't have? Because what the GCC capital has done in Turkey or in other countries is mostly acquisition of existing systems. And also, most of that money is invested in the West, assuming that it is much safer compared to this part of the world, etc. So what is it that is different between your source country and the other capital-rich, members of the region?
Maybe you want to say something too, but let me put it that way. Sayın Hocam, I worked for BRSA and Central Bank before, and I know how the investor from MENA region actually approaching to the any sort of opportunities in Turkey. We all know, if you see the return, you want to get it as soon as possible. For MENA, it's more than that. They want it today. For GCC countries especially. They came here and they were seeing the rise of the multiples in the financial system. As you very well know, it started from 1.2 multiple up to 3, 2.5. So they were seeing this rise. They were seeing how under-penetrated Turkish market. They were seeing how retail-oriented Turkish market, and they see how rich in human resources. And they came here, they said, okay, we can pay this multiple, we can have a bank in a country or a financial institutions, not only banks, in a country where there is an upside. For Lebanese, banks attempt to Turkey, since I am the one who knows the story from the beginning, they had a very different mind, and I think that explains the difference of Lebanese perception or understanding of finance. And I don't want to say something wrong, but when compared to other countries in the region, Lebanon is financially advanced country. We have a very, prominent, sound bankers and banks there. Also in London, you can see a lot of Lebanese bankers working for investment banks. So they have this. It's very similar to Turkey. It's very similar to Turkey that none of the country in the region have. So they started to think, okay, what if we start from zero? And we can use this multiple on HR, on a good technology, efficiency, as you know, and to see what's going to happen. I think right now, at this moment at least, what I could say, it's a success story, as Naim said. We're now growing in more than 11 billion Turkish lira in asset size. It is something, we're not small anymore. We changed our peer group. So that's showing, actually, it's just about how you look the entrepreneurship, as you said. Actually, the answer is in your question. They are different, and they want to do something different. Maybe Naim?
I might just add some figures to that, because the structure of the Lebanese banking sector is also different. If you compare the total assets of the Lebanese banking sectors compared to GDP, it's approximately 4 times the GDP of Lebanon. So, and Lebanese are rich deposit banks. So that's why the branching out strategy started with Lebanese banks, started like 10 years ago in the region, going to Syria, Jordan, Egypt, Qatar. And the most natural and the most prominent and promising, I think, next step for Lebanese banks was Turkey. So that also was a very important decision and natural branching out, I might say.
Other one was Egypt, by the way.
So things do turn around easily. Any other questions?
Thank you for the nice panel. Now we talk about the perspectives of Turkey in the MENA region. Let's ask the question: when only, and if only, Turkey become tomorrow a member of the EU, how would this change? How would this outlook change? How would this relationship be again articulated due to its membership in the group? Do you have a thought on this?
And who did you address the question to?
Could this be an impediment? Somehow, somebody look at it as an opportunity, like countries of Southern Europe becoming one after the other members of the EU. So there's an opportunity there to be part of Turkey. So anticipating the joining of Turkey to the EU, to the Union, will reap the benefits. But some might look at it as an impediment, because if I own a bank in Turkey, tomorrow if they become member of the EU, again the EU regulation would be applied rather than the Turkish regulation. So how could that affect? Probably, maybe Mr. Özcan would have a say on this. Maybe.
Thank you. First, I don't think it's gonna be the case soon, as it is not for a very long time. But I think we have two different dimensions. It's a very good question, thank you. One is having a Muslim country in the EU will change the perception and understanding about EU, Europe as a whole. Middle East will become a border neighbor of EU. So let's talk about the positive side of it. And Turkey, as she did in the last 10 years, will transfer, will export the most precious thing she has: the democracy, the institutional framework, free markets, as much as we can. I know we have problems there, but as much as we can. At least I can say we are developing. And the EU membership idea was helping a lot. Can you believe how it will affect if we become EU member, how it will affect the overall Islam world, Muslim world, MENA region as a whole? So I will take it from the positive side. So it will also affect the finance. It will also affect the economy. Now, the trade relationship between Turkey and MENA is between two regions, two countries. It will be with 30 countries right after that. So it's a huge opportunity for the entrepreneurs of the MENA region too. The other side, maybe you come up with a question if the regulations will be tighter with EU. I worked for BRSA. And believe it or not, one of the most important reasons why we didn't have a huge hit in the global financial crisis is our legislation about financial industry. We are already in line, probably better than them in terms of this base. So it will only affect positively. But again, with their fairness, I leave it to them. I don't think that it's going to be a case very soon. Thank you.
Any other questions? Well, I have one last question for Mr. Baukol. As we count down to Fed's decision and how U.S. economy is doing, I mean, as we hear good news, I mean, we see that Turkish economy and emerging markets economies are negatively affected in the financial markets, at least. Do you think that will continue, that effect?
So, you know, emerging markets around the world over the last few months have been impacted by a variety of concerns. And emerging markets, like advanced economies, are all competing for limited investment resources, and each country has its own set of vulnerabilities and risks. I think in recent weeks, you know, global investors are looking to differentiate and understand the details of each country, and you see that played out in some of the market results over the last number of weeks. I think that will continue going forward. Investors will be looking at fundamentals, looking at underlying risks, looking at what the policy framework is in each case, and that's to be understood. There's a wide variety of shocks out there that countries face regularly, from global growth conditions to oil prices that we talked about to regional political issues. So it's up to each country to look at its own situation and do what it can to strengthen its own fundamentals.
But for the MENA region countries, to conclude, is there something you would like to add and say in this context?
Well, I don't want to group all the MENA countries together. There's a wide variety. The oil exporters are, of course, very different from others. The ones going through a political transition have much more serious political concerns. Turkey is, probably the most advanced of the emerging markets. It has its own challenges, so I wouldn't want to group them all together.
Okay, for Turkey at least.
In Turkey, I think as markets have made clear, there's some concerns, particularly about the current account, as my panelists had referred to, and Turkey has taken a number of steps to try to strengthen those fundamentals and reduce those vulnerabilities. It's working on those issues, and we'll see how it goes.
Thank you. Well, the questions aren't easy. I mean, as the world searches for a new balance, there are lots of questions to be answered, and I think we're out of time. Let's give a hand to our panelists and for our audience for being so patient and staying with us, and of course for our translators who worked really hard all day. Alkış.
Panelistlerimize biz de teşekkür ediyoruz bu yoğun gündemlerinde bize vakit ayırdıkları için. Panelistlerimize plaketlerini vermek üzere sahneye Abdülaziz bin Muhammed bin Zahir Al Hinayi'yi davet ediyorum. Buyurunuz lütfen.
It was an excellent panel. It keeps us very energetic at the end of the day. Thank you very much for the energy you have that is transmitted to all of us. Good management. Because it came in the end.